Let me know when. All right.
One moment. Hold on. There it goes.
Let's call to order the Finance Committee meeting of July 26, 2021. It's 5:01 p.m. Over to you, Christina.
Governor Newsom's executive orders pertaining to the Brown Act currently remain in effect, allowing public meetings like this one to be held by teleconference to help prevent the spread of COVID-19. At this time, I will conduct roll and ask the chair to recognize me afterward to confirm certain matters for the record. Vice Chair Perkins?
Here.
And Chair Zafar?
Here.
Thank you.
And recognize you again, Christina.
Thank you. Based on the responses to roll call, the record should reflect that all committee members can hear the proceedings clearly. If there are no objections, the record will further reflect that each committee member believes, based on voice or facial recognition or otherwise, that the persons representing themselves to be committee members are in fact committee members.
Yes.
Thank you. Seeing no objection, I'll turn the meeting back over to the chair with a reminder that all votes must be taken by roll call.
Awesome. So number 2, public comment. Public comment is limited to 2 minutes. 3 minutes. Anybody in the public wanting to speak?
It appears we have no attendees of the public in the audience.
All right. Well, I guess then we can close public comment. Item number 3, approval of minutes. Finance Committee regular meeting minutes, Finance Committee special meeting minutes, and Finance Committee special committee meeting for.
I'll move all 3 items, 3.1, 3.2, and 3.3 meeting minutes.
And I'll second.
Thank you. Roll call is Vice Chair Perkins.
Aye.
And Chair Zafar.
Aye.
Motion passes.
Item number 4, unfinished business. We have none. Item number 5, new business. 5.1, City of San Ramon Quarterly Investment Report for the period ending June 30th, 2021. Staff report by Candace Daniels, Finance Division Manager. Over to you, Candace.
Thank you. Good evening, everyone. You have before you the quarterly investment report for the period ending June 30th, 2021. It's a state law requirement that the City Council reviews the investment report at least on a quarterly basis. The investment report was prepared by our financial advisors, our investment advisors, FHN Financial, Main Street. The report is maintained on a day-to-day basis. They track our investments for yield maturities, call dates, and market values. At the end of June 30th, the city's JP Morgan Chase balance was $12.9 million, which is available for daily city operation. The funds that are managed by FHN Financial in the portfolio totaled $69.5 million, which consisted of $44.9 million in federal agency securities, $6 million in treasury securities, $3.1 million in supranationals, $3.8 million in commercial paper, $6 million in corporate notes, $4.7 million in FDIC insured CDs, and $1 million in municipal bonds. The weighted average yield to maturity on investments was 1.25%, and the weighted average days to maturity was 641 days, which was 76 days shorter than the previous quarter. The interest rates were 10 basis points lower than the previous quarter. Moving on to the money market, we had a total of $3.1 million in Union Bank, which was 2.74% of the total portfolio. That had an interest rate of 0.01, which is basically hardly nothing. The investments held with LAIF was $13.6 million.
Just a moment about that. I'm looking at page 17, and it says as of June 30th, we were actually at 15.9%, which is above our 15% limit. Now, we established that 15% limit for a reason, and this particular page shows us at almost 16%.
So
Have we talked to, Main Street about that? And why are we at 16% when our limit is 15%? Do we need to change our limit, or what do we do when we're out of compliance?
we were alerted that we're out of compliance, and we removed some of the money from LAIF and moved it to the money market. So on that date, yes, it was a little over the 15%, but we did correct it early in July.
Okay, so is that limit an appropriate limit, or is FTN not paying attention, or what do we need to do?
So I don't think it's necessarily an inappropriate limit. So I put money into LAIF because we had a lot of money sitting in our bank account that we didn't need to use. And I don't think I alerted them on the same date that I did it. So at that point, I'm sure they would have said, don't move the money to LAIF, but I had already moved it over there, and I wasn't aware that we were so close to our limit in LAIF.
Okay,
Once they made me aware of it, then I took money back and put it in the money market to bring us back into compliance.
okay. All right, something to pay attention to.
Yes.
Okay, thank you. Keep going.
So we had investments held with trustees of 3.6 million. The majority of it was the 2019 certificates of participation, which was 3.6 million. And then we had 200,000 of other trustee funds. So that's all I have, unless there are any questions.
I like I said, I like looking at the national data that they present at the end of the report. And I'm always amazed that Germany and Switzerland and a couple of those countries have negative interest rates. That's just really hard for me to understand and how that works. But so you put in a deposit and you have to pay them to hold on to your deposits. And that just seems kind of odd. That's on page 66 of the package. You have negative interest rates for,
Right.
2-year, 5-year, and 10-year yields. So don't buy any Swiss 10-year notes.
Any other questions or comments?
No, I
I
don't.
don't have any.
Okay. Thank you very
Obviously, it'll be part of tomorrow night's council meeting.
Yes, it's on the agenda for tomorrow.
Okay.
Do we need to approve this, or good to move on to the next report?
No, we just move it forward to the council for approval.
Okay, so we move it over to the council for approval. 5.2, PARS Pension Stabilization Trust Statement for the period ending June 30th, 2021. Report by Candace Daniels, Finance Division Manager.
Okay, so you have the PARS statement for June 30th, 2021. In the last meeting, the Finance Committee requested to have more information when I presented this statement to show what the beginning balance was, the earnings, and how we ended up at the balances on the statement. So there's a little background, which you probably already know, that the PARS was created back in 2017 to alleviate some of the pension expenditures so that we would have money to draw from if we're in a budget deficit and needed help paying down our PERS liability. So starting off at the beginning of April, the trust had a balance of 4.9 million. We had investment earnings of 233,000, expenses of about 7,400, which left us with an ending balance of 5.1 million at June 30th. The statement that's attached is an annual statement, which is showing the balance starting in July 2020 through June 30th. I attached this statement instead of the April statement because it only has a snapshot of 1 month. So we are dealing with April through June, but I thought it at least would be nice for you to see the whole fiscal year on the statement.
That's terrific. It's got a 1-year return of 19.4%. That's fabulous. I want you guys to do that again, okay? A couple more times. Now, and a 3-year return of about 9%. That's amazing. That's better than, well, let's see, that's approaching the returns that CalPERS is getting. It'd be interesting to see how they adjust their, I did read the newsletter that we got from CalPERS that shows that they did about a 20% year, and they're going to adjust their their discount rate from 7 to 6.8, which remember, Joe, we talked about, buying or resetting and all that, and I suggested that we wait until CalPERS finishes their fiscal year and makes their adjustments before we do anything, because that could, if we adjust or buy at the wrong time, it could hurt us.
Yeah, Kelly's watching it. We're going to take a look at it very closely. And as who would have thought that if you do so well in the markets, your discount rate actually gets lower and it costs you more money? I'm not sure. Maybe Kelly can explain that. However, we're looking at that, and we'll be using that system we showed you at the goal setting to analyze some options.
Right. Well, I think they are not quite to what they believe their target discount rate is. I think they believe their target discount rate should be closer to 6.5, but they recognize that if they move to 6.5 all at once, they're going to cause some potential municipal bankruptcies, or certainly some real challenges going forward. Whereas over the long run, the discount rate should be 6.5, but if you have a great year, that's the year you do your adjustment, because then the pain's not quite so much.
Right. If I could jump in for a second, that's exactly what happened. CalPERS has what they call the risk mitigation strategy. So in a very good year, they mitigate future risk by lowering the discount rate. So as you said, the pain is lessened that way. So PERS had a 23.1% return for the year. That triggered, there's a table of values, and at a 23.1% rate, that equaled to, per the policy, a 2% or 0.2% reduction in the discount rate. Mm-hmm. So the rate going forward will now be 6.8%. But from what the economists and the people in the know are saying, this is also a PERS rate review year, and they do those every 4 years. So in November, we've been cautioned not to be surprised if their discount rate gets lowered again, down to more like a 6.5%, as you mentioned, Vice Chair Perkins.
Last time they did a major change in the discount rate, they implemented it over a couple of years, as I recall. Is that right?
Yeah, they did what was called, they called it the ramp up and then a ramp down. I want to say it's a total of 7 years, ramping up and then hitting a peak and then ramping back down. I suspect they would follow the same strategy if they drop it again, just to give those municipalities that are in dire straits time to absorb and to prepare for the increased rates, the increased expense.
Right. Yeah, I'm very sensitive to that, and I'm glad to hear you're watching it carefully, and that will affect the strategy we use going forward. It's great to have this $5 million sitting in our pocket going forward, so that we can, if nothing else, we can chop the top off of some future years' payments. But there might be a better strategy going forward.
Yes, and we're considering those.
Yeah. Did we change any strategy, or it's just the market conditions that have worked in our favor this year?
We haven't changed strategies at all.
Okay.
this is, when we started this, we chose a investment strategy that is not super conservative, but definitely is not super risky. It's really kind of a moderate, and you see it's in a thing called moderate high mark plus,
High mark, yeah.
whatever the heck that means. But that's their kind of Goldilocks strategy of trying to find a place where you can make money, but your risks are relatively modest.
Okay.
I got nothing else to add.
Yeah, I don't have any questions. It's
Okay.
great.
Thank you.
All good news.
Yes, good news.
Mm-hmm. I'll be
All
interested
right.
to see what our health fund
Right.
looks like with the kind of investment year we've had this last year.
Yes.
I'm
so
sure we'll be at 100% plus.
That
Okay.
statement wasn't available yet. They're still closing out the fiscal year, so it's supposed to be available sometime next month, and we'll take it to a future finance committee meeting.
Good.
You got to
Good.
remember also on the trust though, is you have more and more employees retiring into that. So it may have received a good return, but
Right.
they also are continually
Yep.
dumping employees in.
Yep.
But let's hope. I'm hoping so myself.
Well, yeah, that's it's trending in the right direction, at least for us. And how many cities have better than 80% of their retiree health funded? It's what, a handful, maybe
Not many.
kind of on two hands, maybe at most. So I'm grateful for where we are. Got to give Jim Livingstone and Greg Rogers a lot of credit for doing that. I was on the finance committee with Jim and we did that, and Greg brought it to our attention. We ought to do this, and lo and behold, it's worked out for us.
Sure has.
All right. Number 6, committee member comments. Any more comments from you?
No,
Vice
just
Mayor?
looking forward to see our health trust.
Thank you so much, Candace.
Thank
All
you.
great news.
Thank you.
If nobody else has any comments, then this meeting is adjourned to the next one
Thank
on
you.
August 9th. All right.
All right.